Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Thursday, December 15th. This will be a technical analysis breakdown. So if you're somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, a couple of clarifications. First off, the market's still open, so that price you see right there will be moving around, and the candlestick you see right there will be moving around. So it is open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks represents 30 minutes worth of time. So stock number one here, RNA, and a very, very explosive move here. And you got to think that a lot of eyeballs will continue to be watching this one moving forward. And we have ourselves a nice little technical pattern here. So when a lot of people are watching the same pattern, wondering the same things, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. So the one level you got to think a lot of people will be watching moving forward, right up there at $19.50. So again, no guarantees, but is it rational to think that the price can come up there and get a break up through there, that break could create additional buying pressure? Yeah, that is certainly a valid thought process. In terms of levels of support, you have this very solid level right down here now at $16.50. So keep an eye on that. And then just from a broader pattern perspective, keep it one color. So we have our resistance, we have our support, we have the big move up like that. And this would be known as a bull flag pattern. So if you like to play bull flags, definitely keep an eye on this one. Next, MULN did this analysis in yesterday's top 10 video, and overall the uptrend continues. So higher highs and higher lows, and that is the name of the game. So let's get some new levels here mapped out. So newest level that I would argue from a support standpoint is going to be that former breakout point right here at the 24-cent mark. So if there are any sort of pullbacks, I'm not saying it will, but think about it. Even if the price were to come down to 24 cents, find some support there, what would you have from the big picture point of view? Well, you'd have a set of lows there, you'd have lows there, lows there's, lows down there. And if you envision those as stair steps, then again, big picture, you'd still very clearly have stair steps progressing in the upwards direction. So in my mind, 24 cents is an important level here moving forward as far as the overall trend health is concerned. In terms of next potential battlegrounds, got to squeeze things down here quite a bit because as you're seeing here, we're going back a ways into the chart's history, which is always a good problem to have. So next key area of resistance to watch very closely, going to be right up there at 31 cents. So 31. So it's definitely got some wiggle room to continue to pick up some momentum. Does that mean that on Thursday it's going to go straight up to 31 cents? Of course not. No guarantees. But there does seem to be some space around the chart for it to continue on with the momentum. But you got to love this down here. Volume, is very, very important. And you can see it's getting a surge of it right now. So let's see if it carries into Thursday. Next, IMMX. And this one's looking a bit sketchy, looking like there could be a bit of a bigger pullback here, which I think is going to draw a lot of eyeballs to this former breakout point right here, and essentially right around a gap close location, some would argue, which I'd agree with. But right here at the 165 mark, and again, this is based upon the general rule that when levels of resistance, which you can see acted as resistance there, and there are broken, they tend to act as support. Not guaranteed to act as support, but tend to act as support. So if the price does come down there, while you're not guaranteed a bounce, nobody could accuse you of saying, well, that's some sort of random area. That was a degenerate gamble. Well, no, you'd have logical reasoning behind it. Again, that does not mean that it's for sure to work out, but there's at least a thought process there, based on that just, foundational rule of resistances behaving as supports. Now, if the price does start to turn itself back around in terms of areas of resistance and levels to keep an eye on in the near term, this level right here at 210 looks to be very, very important. And then you have a level up here around the 245-ish mark. But one hurdle at a time. Let's just first see if the price can turn around and get up through that level right there. But yeah, definitely a bigger pullback here. But from a bigger picture point of view, still plenty of opportunity to build an overall uptrend. So let's see how it continues to play out. Next one, VLON, and I like this one just because it's got such a well-defined potential turnaround point, and that turnaround point being right here. Again, going back to that talking point of self-fulfilling prophecies, I'm not trying to proclaim that this 60-cent mark is a special skill that I have or a great discovery. I'm thinking that a lot of people have noticed this level, and as I've said and will probably continue to say, no guarantees, but it's certainly valid to think that if the price comes up here and can get a break up through that 60-cent mark, that it could regain some momentum. And, who knows? Does it go back up and retest those highs? Does it go above? I mean, that's in the cards, but my point here is that does it even really need to go that high in order to make it a worthwhile trade? That's going to boil down to your personal trading strategy. But 60 cents is a very, I would say, well-mapped out level that a lot of people will be watching. In terms of levels of support, you have this area right here at the 44-cent mark. But if you want to be a little bit aggressive and require even more of a pullback, then you have this former breakout area down there around the 32 cent mark. But, that's one of those levels where, yeah, it could give you a fantastic entry point, or maybe you just never get in because it turns around before ever going back down there. But, that goes back to your personal strategies. But these are definitely the levels that stand out the most to me. Next one, AMC. And all things considered, I would say this is a pretty solid day. All things considered, being the backdrop of today was the Fed rate announcement and the speech. And yeah, it's not like today was a fantastic day where it skyrocketed up, but it didn't even put in new lows, which, is a good sign. Now, maybe you're saying, well, geez, Clay, that's setting the bar kind of low. And I'm not going to refute that. That's a more than fair point. But I guess my core idea here is that it could have been way worse. The price could have actually, came down here, retested that level, and then just crashed down through there. But no, it wasn't even tested today. So, but you also don't want to look too much into it. You don't want to, say, oh, okay, therefore this must be the bottom and a bounce is coming. I mean, maybe, but you don't want to get too excited. So yeah, I understand some excitement saying, wow, held up relatively well today, but you don't want to have too much excitement. In terms of areas of resistance, you have a pretty well-defined level now here at 585. You can see that once, twice, and then 3 times today. The price has been up around that area and struggled with it. You're also going to want to continue to watch that purple line there, the 50-period moving average, which is now slightly down below that red line there. But point here being is, yeah, today was a respectable day, but there's still a whole lot more work that needs to be done. Real quick, wanted to take a break and personally invite you to get signed up for this free live online training that I'm offering next week. So if you've been enjoying what you've seen up to this point and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then definitely get signed up for the free training. If you're watching on YouTube, there's a link in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then I definitely want you to get signed up for the free live training. Next one, TSLA Tesla. And yeah, right now, nice green candle. But the first adjustment that needs to be made, and the key dynamic here is, well, what direction is this adjustment being made? And now that we have more data, the adjustment is, well, this support level needs to officially come down here to this 156 cent, or not, $156 mark, excuse me. Because yeah, to give credit where credit's due, it was tested multiple times today and so far has held up very, very nicely. But the problem with that is, I had to adjust that green line downwards. Not good. You want to see levels of support needing to be adjusted upwards, not downwards. But it is what it is. So 156 certainly going to be a very important level to watch on Tesla going into Thursday. In terms of levels of resistance, still at this level here, but now that we have more data, again, direction. I'm going to go ahead and adjust this level down here to that level at 163.25. And as you saw, I had to bring that red line down. So when levels of resistance need to be adjusted in the downwards direction, just goes to illustrate the bearish nature of the chart. But those are definitely going to be the 2 key levels to watch here moving forward. And as somebody that trades Tesla on a relatively routine basis, like I said, these are the levels that I'll be most interested in. Next one, CRKN, and this is definitely, I mean, all trading is for the disciplined trader, but these sorts of setups are certainly for the disciplined trader because, yeah, things are looking very ugly right now. Very well could be game over, but there can be opportunity in the ugly, especially when prices are nearing very interesting levels, and that's what we have here. And just to, remind you what a watch list is. A watch list is defined unique, to find interesting situations, and not randomly rush out and buy anything, but to watch it. And the level that, in my mind, is worth watching is right down here at 15 cents if you enjoy these sorts of plays, particularly in the world of penny stocks. And no guarantees, but you have just so much data down here. You have a former breakout point. You have the 50-period moving average. You already have a data point once of it bouncing off there. So again, does that mean that it'll for sure bounce off 15 cents? Absolutely not. But is it valid? Is it reasonable to think that it could? Absolutely. But that is why risk management matters, because if it doesn't, you don't want to turn into one of these people that are still holding and hoping down, at 5 cents. But if you can get a nice bounce, then relative to what was being risked, you could be looking at a very nice trade plan formation. So if you like to play these kind of ugly looking charts that still have some opportunity, you like to play penny stocks, keep an eye on it. Next, SOFI, and like this one, good solid pattern here. So once again, takes us back to the talking point of, get that in play there, talking point of, self-fulfilling prophecies and, areas that you got to think a lot of other people are watching. So let me change that to green to represent more so the support part of it. And then to make this just one color, easier to see. Hopefully we have our resistance, we have our support, we have the big upwards move there. Let's put the golf down there to make it that much more visual. And we have ourselves a nice bull pennant pattern. So no guarantees, but if the price can't come up here and get a break up through the top part of that pattern, is it valid? Is it rational to think that that could create good, solid upwards pressure? Yeah, that is certainly a valid conclusion. Next one here, AMZN. And I like this one for, I was going to say one reason. more than one reason, but a very big reason is because the ability to do this right here. That nice flat little line drawn there at 93.50. So it goes back to that talking point of self-fulfilling prophecies and the fact that Amazon, very, very popular stock. So it seems very reasonable to assume that a lot of people are going to be watching that level and saying, hey, I wonder if the price breaks through there. Because if it does, that would be a little bit of a breakout. And if I'm a breakout player, well, I'm supposed to buy breakouts. So you can see how the self-fulfilling nature of that could come into play. But 93.50 nonetheless is definitely going to be a very important level to keep an eye on from a resistance side of things. In terms of levels of support, you have a couple data points down there at 90.50. You have former breakout area here. Resistance there. So that makes it the breakout area, which now could make it a potential support, which is where it acted as support there and there. So 90.50, another one of those key levels to watch very closely. Next, TQQQ, which is the most popular ETF out there right now based on volume, and it's something that is correlated to the NASDAQ, meaning if the NASDAQ market goes up, so will this one. It just allows you entry point at a much cheaper price. And I mean, I don't want to pat myself on the back, but I do want to pat charts on the back, and I suppose offer up a quick plug. Get signed up for that free live training, because this will mean more to those of you that have watched past videos. But if you have, you know that I put in that red line before today. Check out right where it found resistance. Boom and boom, right at that level. For those of you, again, you remember that green line there. Look right where, generally speaking, it found some support. Slight little move down below there, but then a very, very impressive bounce off it. So that's just my long way of saying that literally everything I talked about in yesterday's video holds true, is still relevant, and I would argue the most relevant heading into tomorrow. So yes, resistance-wise, you have that area up there right around the $23 mark. Support-wise, you have this overall trend line that I've had in play for several days now, and that is exactly why. But yeah, other than that, like I said, not a whole lot I can say, just because what I talked about yesterday still holds true. So that wraps up the top 10. Again, like I was just saying with that final one, but if you enjoyed what you saw, then definitely get signed up for the class. It'll be next week, Thursday, December 22nd. At 7 p.m. Eastern time. I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit the like button. Tell me what you traded today. Tell me what you're watching tomorrow. But those two things, leaving a comment, hitting the like button, tell me that you enjoy. And as long as I know people are enjoying, I'll continue to make these. So again, get signed up for that free class. Hit the like button. Leave a comment below. Thanks for watching. Have a good one.